This week, could the Department of Government Efficiency, or DOGE, spell the end of the CFPB or defund HUD? More after this short message.
Building relationships is the way Mutual of Omaha has grown into one of the leading financial services companies in the world. Our reverse mortgage wholesale division is proud to carry on this 100-plus year tradition. To your borrowers, a reverse mortgage is more than a transaction. It's a promise of a better, more stress-free life. Our goal is to provide you, our valued client, with the best service and support possible so you can focus on helping your borrowers achieve the retirement of their dreams.
If there's one man who has the ear of President-elect Donald J. Trump, it's the world's richest man and entrepreneur, Elon Musk, owner of Tesla, SpaceX, and X, formerly known as Twitter. Since Trump's election night victory in November, Musk has spent several days at the president-elect's palatial mansion in Mar-a-Lago, Florida, and later treated Trump to a front row seat of a recent SpaceX launch. Musk wasn't always a Trump supporter, as evidenced by his shifting political allegiances. The self-described moderate has a long history of supporting candidates on both sides of the aisle. However, lawmakers from both parties are likely to balk at some of the proposals from the Department of Government Efficiency, or DOGE as it's known, which Musk and Vivek Ramaswamy have been tapped to lead. The non-governmental agency would identify areas of alleged waste and inefficiency and make recommendations to the White House, members of Congress, and agency leaders. But gutting the size of a bloated and inefficient government shouldn't be too difficult. It's a target-rich environment for DOGE. The question is, how could such drastic measures impact housing finance, lending regulations, and reverse mortgage lending? In one word, substantially. The adage of using an axe instead of a scalpel comes to mind. Delete the CFPB. There are too many duplicative regulatory agencies, Musk posted on his social media platform X on November 26th. Many mortgage professionals who have weathered the Consumer Financial Protection Bureau's swathe of regulations and enforcement may be inclined to agree. But is the CFP the proverbial Department of Redundancy Department? The Consumer Financial Protection Bureau was authorized by Congress in the 2010 Dodd-Frank Act in the wake of the 2008 Great Housing and Financial Crisis, and it functions under the Federal Reserve. Some of the more notable CFPB policies enacted in the last 14 years include the Ability to Repay rule, which mandates that lenders verify a borrower's ability to repay a mortgage based on income, assets, existing debts, and credit history. In 2015, TRID, or the Truth in Lending RESPA Integrated Disclosure Rule, went into effect, combining the Truth in Lending and Real Estate Settlement Procedures Act, or RESPA, into two documents. Other CFPB rules governing mortgage lending include revised mortgage servicing rules, the prohibition of prepayment penalties for qualified mortgages, an update to the HMDA, or Home Mortgage Disclosure Act, and most controversially, the Loan Originator Compensation Rule, which prohibits compensation to a loan officer based on the loan terms. Now to the CFPB's role in HECM lending. While the CFPB doesn't specifically create HECM rules, it does enforce compliance with the rules that HUD has implemented and wields influence on those policies. Key HUD rule changes supported by the CFPB enforcement included the HECM financial assessment and non-borrowing spouse protections, enhanced consumer disclosures, the prohibition against cross-selling of any financial products, and increased scrutiny of reverse mortgage advertising. So how would mortgage lending change if DOGE, or the Department of Government Efficiency, eliminated the CFPB? Critics claim that the consumer protections would be substantially weakened, and that could lead to an increase in risky lending practices and predatory loans, fewer foreclosure protections, and regulatory confusion. That confusion could result from state regulators and other federal agencies, for example, the Federal Reserve or OCC or HUD, stepping in to fill the void, resulting in gaps that could lead to fragmented oversight. Lenders operating across state lines may face varying rules and increased complexity. However, mortgage lenders may argue that the elimination of the CFPB could save billions in compliance costs nationally, savings that could be passed on to the consumer. What if DOGE slashes the Department of Housing and Urban Development's budget? That's one concern. Inside the reverse mortgage industry, some are expressing concerns that such an action could hinder the ability of HUD to effectively manage the FHA home equity conversion mortgage program and also to endorse new loans in a timely fashion. While overregulation is costly and inefficient, the impacts of eliminating the CFPB or slashing the funding of other government agencies are certainly to draw criticism and also resistance from Republicans and Democrats alike. Moreover, neither Trump nor DOGE would be able to dissolve the agency without authorization from Congress. What are your thoughts? You can leave your comments in the comment section below. And as always, please share this video with others. Don't forget, we have a YouTube channel that you can subscribe to. And each and every week, we bring you the most recent reverse mortgage news in our weekly podcast, Peckham World Weekly. We have both a video and an audio edition as well. Thank you for watching, and we'll see you next week.